FY27 earnings conference call of Share India Securities Limited, hosted by Valorum Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorum Advisors. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone, and a very warm welcome to you all. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations of Share India Securities Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the first quarter of the financial year 2027. Before we begin, let me mention a quick cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial performance for the quarter under review. Now let me introduce you to the management participating with us in today's earnings call. We have with us Mr. Kamlesh Shah, Managing Director, Mr. Rajesh Gupta, Director, and Mr. Sachin Gupta, Chief Executive Officer and Whole-Time Director. Without any delay, I request Mr. Kamlesh Shah to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Purvangi Madam. Good afternoon, everyone. Thank you for joining us today for Share India's earnings presentation for the first quarter of financial year 2026-27. We appreciate your continued trust and interest in our company. The first quarter was characterized by a rapidly evolving regulatory landscape, heightened geopolitical uncertainties, and continued volatility in the global financial market. Domestically, while India's macroeconomic fundamentals remain strong, the capital market industry witnessed significant changes, including regulatory measures introduced by SEBI in derivative segment and tighter funding norms prescribed by Reserve Bank of India for top desk trading. Despite these industry-wide headwinds, I am pleased to share that Share India has delivered its strongest quarterly financial performance to the date. This demonstrates the resilience of our diversified business model, disciplined execution, and continued focus on sustainable long-term growth. Talking about the financial performance, during the quarter, our standalone revenue from the operation increased by 28% year-on-year basis to 349 crore, while profit after tax grew by 32% to 90.85 crore. On sequential basis, the standalone PAT increased by 21%, reflecting continued operational momentum. As at the consolidated level, the performance was even more encouraging. Revenue from operation increased by 31% year-on-year basis to 448 crore, while profit after tax rose by 48% to 124.41 crore. Compared to the previous quarter, consolidated PAT more than doubled, registering an impressive 114% sequential growth. Diversified business model. One of the Share India's key strengths continues to be its diversified business model. Our presence across broking, market making, merchant banking, wealth management, treasury operations, technology-driven business, and other financial services enabled us to reduce dependence on any single revenue stream. The diversification has allowed us to remain resilient even during the period of regulatory transition and changing market dynamics. Our financial position continues to be robust. As of 30th June 2026, our net worth stood at approximately 2,760 crore on consolidated basis, providing us with strong capital base to support business expansion while maintaining financial flexibility. To further strengthen our funding profile, we have initiated commercial paper program backed by the highest short-term rating of CRISIL A1+. In addition, we are progressing with the issuance of non-convertible debenture program, which will diversify our borrowing sources, optimize funding cost, and support growth of our leading and capital market business. Technology and innovation. Technology remains central to our long-term growth strategy. We continue to invest in artificial intelligence, automation, and digital capability to enhance customer experience, improve operational efficiency, strengthen compliances, and support better risk management. These investments not only improve scalability but also position us to respond effectively to evolving customer expectation and regulatory requirements. Growth initiative. Looking ahead, we remain focused on expanding our high growth business. We see significant opportunities in margin training facility, wealth management, portfolio management services, alternative investment funds, family offices, merchant banking, and institutional business. At the same time, we continue to strengthen our retail franchisee through digital platform and technology-led customer engagements. Funding strategy. Since Share India is launching CP and NCDs, this will help us to counter the RBI measures which restricted top desk funding, and we continue to grow our business in uninterrupted manner. Diversified funding framework. Current sources, we have bank borrowing and retaining companies' profit to deploy for effective use, commercial papers, listed NCDs, internal accruals, and many more. The benefits are lower cost of borrowing, funding diversification, liquidity flexibility, supports MTF growth, and efficient capital management. Outlook. Although the industry continues to face challenges arising from regulatory changes, funding cost, and geopolitical uncertainties, we remain confident in the long-term growth prospect of the Indian capital markets. Supported by our diversified business model, strong balance sheet, technology-driven approach, and experienced management team, we are well positioned to capitalize on emerging opportunities. Subject to overall market condition, we remain confident of delivering around 20% growth during the current financial year. Before I conclude, I would like to thank our shareholders, investors, customers, business partners, regulators, bankers, and our dedicated employees for their continued confidence and support. We remain committed to delivering sustainable growth, maintaining the highest standard of governance, and creating long-term value for all our stakeholders. Thank you for your time and continued support. With these words, I would like to hand over proceedings to Mr. Sachin Gupta for detailed analysis uh, and future growth strategy. Over to you, Sachin. Thank you.
Thank you very much, sir, for explaining the Q1 results in detail. And thank you everyone for joining the call today. Good afternoon. So as Kamlesh sir explained that we are very confident despite all the challenges from the regulatory side, we are confident that we'll keep on growing in this challenging environment. And as we all know, our focus is always, since last 2 3 years, our focus is to grow on the retail side, and a lot of new products have been introduced and launched, and slowly and gradually all these products are showing positive results for us. I will just explain step by step where we stand in terms of all the offerings and what are our future plans. So the Share India's core focus is into retail now, offline retail, and we are constantly opening our new branches in tier 3 cities mainly. And the focus is to expand our MTF book and retail footprints into these cities, and offering not only the broking but all the wealth products and to all the customers at the ground level. So recently we have opened 6 branches, mainly into Banaras, Indore, Bhopal, Raipur, Agra, and Nagpur. So Hyderabad also. 7 branches we have recently opened, and it's a mix of south and it focuses not on north only because we are already having a good presence in north. So we are hopeful that as we targeted 30 branches in next 2 years, 7 are already operational. Once these branches start showing positive results, then we'll again continue our journey with the branches on the retail side at the tier 3 cities. So retail business is showing good results, and as MTF book stands around 470 odd crores at the end of Q1. So despite the extreme volatility due to international factors, markets, especially mid-cap, small-cap stocks are extremely volatile. Still, we are able to hold on to our MTF numbers, and they are showing mild growth. So 470 crore is the number, and by next 2 years, our target is touch 4 figures, 1,000 crore book we are targeting in next 2 years. So MTF is one thing where we are bullish, and it gives us sustainable revenue. And with MTF, we're able to hold on to the clients, and we get rub-off effect into the wealth products and derivative side and everywhere. So retail side, MTF is at 470 crores. We launched our PMS in Q1, and at the end of Q1, our PMS AUM in the direct PMS and advisory stands at 150 crores. That's a very decent number as the PMS was launched in Q1 only, and our target by end of financial year anywhere but around 250 odd crores. More 100 crore AUM in PMS this financial year. So PMS is another product which helps us, which gave us big motivation, as 150 odd crores AUM in Q1 in first 3 months of the launch is a big boost for us. AIS still we are working with the regulatory things. We believe we'll be able to launch our AIF in Q3. So that will be another product, wealth product from our side. And so there we also believe that results will be good, and we'll be able to get good clientage in AIF also. So, but on the institutional side, that institution team is constantly showing, good growth. Every quarter they are able to, grow around 15 to 20%. So right now, after the Q1, our institutional active clients stand at 212 versus 186 clients in till Q4. So that's a 15% growth overall into the institutional business. And U-Trade subscriptions. U-Trade is our algo strategy for retail. There we have seen a 20% growth into the subscriptions. So in between Q4 and Q1. So U-Trade is also one thing which is a unique product offering by Share India for our clients. And another business that a new branch we started in Q1 was Share India Cred. Share India Cred was a debt trading company. So now this company is mainly into dealing debt market products, especially NCDs and all. So the great part is it started operations in Q1 only, and it is led by Mr. Keshav Goyal. So first quarter, they have done the sales of around 74 crores. They have underwritten 74 crores, and they have done six issues, and with EBITDA of 1.08 crores and PAT of 40 lakhs. So we started the operations in Q1, and the company has done a decent sales and a positive number, 40 lakhs. That's a big encouragement for us. So all departments, all divisions which we started since last 2 to 3 years have started showing good numbers now, and we are hopeful. The way we are going will be able to offer wide range of product to all the customers. So that is what is helping us. But another silver lining is Gift City. Gift City, we started some international trading desk. Recently, it was facing some challenges, but Q1 showed very good returns. So Gift City numbers in Q1 were positive, so around 2 odd crores. So that's also big encouragement for us wherever we were making some small losses, and it turned out to be a very good quarter in Gift City also. That's a big encouragement. So there is no burden on a single company now. And on the merchant banking side, again, merchant banking team is very boost up. They are doing decent job in Q1. We did one IPO, which was an SME IPO, I think around 200 odd crores. So that was a big boost for us. And today when we are speaking, we have just finished our first main board IPO, and we raised around 167 crores. And the total overall subscription till now is more than 12 times into this challenging market. Although market is good today, but in last week market was very bad, very volatile. Still, we did a very decent job, and merchant banking team is doing very good job, and we are hopeful that coming 2-3 quarters will be able to show very good results from the merchant banking team also. So all divisions, whether it is retail, PMS, AI, wealth products, and all the AC team, and especially Share India Credit, Gift City, they are the big boost for us in this quarter. Merchant banking, they are doing decent job. So we are hopeful. The grip is very strong, very diversified, and we are able to offer multiple products to the customers. And with the footprints on the ground with the tier 3 cities, so we'll be able to hold on to our numbers. And as the company has said, we are hopeful to achieve the growth target we are expecting. So companies on very strong footing, despite a lot of regulatory challenges. We believe major challenges are over now, and future seems to be very good for Share India. But every team is very motivated, extremely pulled up. On the wealth side, last comment. On the wealth side, wealth distribution team, they are already hiring. The team hiring is going on, and we believe that we'll be able to start our operations by Q3 of this financial year. So going for the next 2 to 3 years, we believe that we'll be very solid in all the different revenue streams, which is extremely diversified and which gives most sustainability to us. And we hope so that this business environment is good for us. And going further, I'm very hopeful. The way business is shaped up, Share India should do good in coming 2 to 3 years. This is from my side, sir. Thank you very much.
Operator, you may please open for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants who wishes to ask a question may please press star and 1 at this time. The first question is from the line of Shubhi from Trinetra Asset Managers. Please proceed.
Good afternoon, sir. So my first question is that we have a goal of opening 30 branches in about tier 3 cities over the next few years. So what is the expected payback period for these branches, given the ticket size and the revenue per branch would be lower in these regions?
Sachin, would you like to answer first? Then, I can
Sorry,
supplement.
I missed the last part of the question. So I just heard that we are planning to open tier 3 branches. So what was the last part of the question?
Sorry?
What could be the period by which, we could be profitable?
Payback period.
So I tell you, ma'am, there is a very simple science with every branch. So I can happily explain that. So our goal is 8 months branch should be at par within 8 months, and the mathematics for that is every branch need to do at least 15 CR MTF book in the first 8 months. So if the branch is able to achieve 15 CR MTF book, then branch automatically starts generating good revenues. So first 8 months is our unit economics with every branch. So rather, in our sales pitch, we keep it 6 months. But we have seen that if the branch manager is good, if team is good, and they are able to hold on to the customers, so there is a vacuum on the ground that MTF in the tier 3 cities, and offering by the brokers is not much. Some brokers are definitely present, but they have very limited options in the tier 3 cities, especially for MTF. So 8 months is a period for every single branch independently to get at par, and after 8 months we start getting positive for every branch. So that is how we have started to move ahead. Like 24 months, we are planning to open around 30 branches. So we are going like 8 branches in one tranche. So once the 8 month period is over, then again we'll go for the 8 branches. So this is how we have spread our overall target that to go for the branches. So next 24 months, we were hopeful that we'll be able to open around 30 branches, 25 to 30 branches, and every branch should be profitable. And if some branches are not profitable, even after 12 months, then there is a hard stop after 12 months. There is no looking back. We have to stop the branch, cut the loss-making branches, and continue with the profit-making branches. So every area, every geography has their own unique demand. Like, if you go to Hyderabad, they have they do need MTF, but their quality they are asking is much different from from Calcutta. Calcutta is highly derivative based location where people are trading heavily into options. Their algo is not at all available. So their pocket size is big. They are trading into 100 crores of margin, but they are not introduced to algos at all. So what we are doing, we are meeting people, high net worth individuals, and providing them the best of tech we can do, and there we are getting extremely good business. When we go to Hyderabad, there we need to be very careful with the MTF offerings, but their derivative business is not that great. There we have to go with the good research, cash market based stocks, and offer the MTF book. So every region has their own demand, own way of trading. Like if you go to Indore, especially, there people are investing more into IPOs and the new companies, correct? And the best part is Share India is able to take care broadly all the demands by the customers. So if we put all products together, so we are hopeful that eight months is a good enough period for a branch to get profitable now.
Okay, sir. Thank you. This is very helpful. Thank you.
Thank you. The next question is from the line of Pooja Patel from Rudra Capital. Please proceed.
Hello. Hello.
Yes,
Yes, sir.
Pooja,
Please go
you
ahead.
can go ahead.
Yeah. Sir, I have one question regarding to our low E and high growth, but the stock is not performing well in market.
Sachin, would you like to tell something on this?
Sir, see, this is a little bit a hypothetical question. So we cannot comment on the stock price and the stock performance. So it's stock performance is a result of so many activities. It's beyond business sometimes. So it is maybe our industry is going through extremely heavy regulatory changes. So definitely growth has been challenged, and people are taking more time. This is a consolidation period for the industry. And since last 2 years, we are struggling with these things, and entire industry is consolidating at some axis. And once the industry overall goes into a growth trajectory, then I think it can reflect into price. But price is a result of so many other factors which are beyond company's control. So we cannot comment much on that part, but yes, company is very strong, ground is strong. We were able to handle all the challenges that were coming for the industry, and we were able to use this period to diversify into different verticals. Like if you see 212 institutional clients, if you see gift city operations, merchant banking, first main board IPO we completed today, and constantly we are upgrading our scales, upgrading our business style, also expanding into different verticals. So maintaining our MPS book above 4.
AIF.
Sorry.
AIF.
Sorry?
When you are able to launching AIF?
So we are planning to launch AIF as explained. Sir, hi sir, this is Abhinav. As explained by Sachin sir earlier in his commentary, AIF is application under process, and we should be able to initiate our process in Q3 of current fiscal year.
Okay, thank you.
See, there were many apprehensions regarding the growth of stock-broking entities, especially with respect to the regulatory changes that has happened and the tightening of F&O regulations. In addition to that, RBI also came out with guideline for prop-based funding. Now, all this put together, has created certain apprehension in the mind of investors. But if you have seen the last quarter performance, though the entire period of 3 months was marked by geopolitical conflict, still this was one of the best quarters for the company. See, we are well equipped even for regulatory changes. We are prepared in advance. We have very high net worth, which accommodates us with more flexibility and room for expansion. Not many small brokers are facing difficulties to meet the additional capital requirement, whereas we have planned everything in advance, including issuance of NCDs and CPs, so that our business remains intact. If you see our performance compared to our peers, we have performed far, far better. And we are not dependent on one stream of revenue. We have diversified stream of revenue, so that is helping us also. And going forward, we feel that things are getting settled, and we are getting benefit of all the efforts that we have done, all the advanced planning that we have made, and we are in a better position to capture the market. We have also focused on the retail, and we have unique advantage of algo trading. So that is how with the input of AI and automation, we are well placed. So we are confident the share price will get reflected automatically, based on the performance and once the market gets settled. Thank you.
And sir, last question. Sir, what is the purpose of acquiring a tech company from Bombay?
Sir, are you referring to Silverleaf?
Yes.
Yeah, so Silverleaf acquisition was announced a couple of years ago. This is a company led by Piyush Dhananjay, both IIT Bombay graduates, along with Vikash. They have been in the business for more than 12 years, and they bring onto the table not only the technology stack, but the entire HFT protocol into the Share India fold. And along with them, we are really hopeful for our geographical expansion in third-party countries apart from India as well. So it is a strategy in line with our global expansion plans, apart from just being focused on India-based products, along with strengthening our technology backbone and the backstack of the current stature of the company.
Thank you, sir. Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. Participants who wishes to ask a question may press star and one now. The next question is from the line of Rohan from Eternal Capital. Please proceed. Mr. Rohan, your line has been unmuted.
Yes.
You may
So,
proceed.
can you hear me? Yeah, I'm sorry. Can you hear me?
Yes.
Yeah. Loud and clear.
Yeah. I think some of my question might have been answered previously, but I wanted to just understand what were the key drivers for the good performance in the broking and trading segment, despite I think the RBI policy and all those tailwinds. And can you provide a split between the prop trading and broking and the broking and trading segment in that?
Sachin, would you like to answer?
Let Abhinav start, I will follow.
Okay.
Abhinav,
Sure. Yeah, sure. So thanks a lot for this query, sir. I think as we have been continuously reporting, even in this call, we have said that there have been a certain amount of regulatory headwinds that has been in this industry for last couple of years, and specifically from last couple of quarters. And during this transformation, what we have been able to do is we have been able to diversify ourselves into multiple business streams. Along with the background, we have been able to change the basic drivers from primarily being a transaction-based business to being more of a lending-based business. So what I mean by that is now we have a very significant amount of MTF book, which is around 465 odd crores. So there is a significant amount of interest income that comes accrue because of this on our income statement, which has a very significant and a direct impact on our bottom line. Along with it, all the transactional-based businesses, as we go and penetrate into tier 3 branches, we open new branches, we engage with new customers, the rub-off effect of multiple transaction-based businesses also keep showing, which add on to our top line without a very significant cost being associated with them. And as explained earlier, all the costs associated with this expansion has already been included in the P&L. So hence, the current impact of any revenue growth that we derive from these businesses is very significantly visible on the bottom line. So this is what the drivers are. Essentially, the cash segment is doing really well in current segment, which is being driven by not only the transaction-based business, along with it, the MTF book. Also, the diversification into multiple products, whether that be PMS or mutual fund distributions or any third-party distribution or any other kind of product, are also adding on to a bottom line. In terms of distribution, our current prop to distribution is in what has been our average of around 52% is from prop and around 48% is from the broking business.
No, I would like to add here. So if you look at the numbers, so all the subsidiaries have shown very good results. That not only the parent company, they are not depending on the parent company only. So if you look at India Algo Plus, they have given the very good numbers. If you look at IFSC, again, that company was into losses, they have shown good results. Share India FinCap, their numbers have improved. Share India Capital Services, their number have gone up. So all these subsidiaries, they contributed really well. And even in Share India parent company, retail per se business revenues have gone up, and like interest income have got stabilized and other things. So putting all things together, so yes, definitely some impact of the valuation, right? In quarter 4 there was a negative impact on the valuations, but still, valuations number was not that great, but some positive impact at least. So putting all these things together, this quarter was very good for us. And if we're able to hold on the same performance by the subsidiaries, it will be a great support for the parent company. And going further, we believe Share India will keep this flow maintained for the coming quarters.
I would like to add, hello. Yeah, Sachin, are you through?
Yes, sir. Yes, sir.
Yeah. See, I would like to add a few points here, so that, it can benefit all the investors. The realization during the quarter has improved a lot. We are in a position to maintain the market share because of the advanced planning and preparedness to meet with the requirements of the margin and funding. Commodity business also is showing a lot of improvement, and that also is adding to the profitability of the company. We are very well positioned in the market compared to our peers. The smaller players, would find it difficult to go and service their client. And with the kind of technology background, use of AI and automation, that has given us edge compared to peers in the market. So we have done, as I mentioned to you, even the entire period was marked by geopolitical conflict. We could, deliver best result possible. And going forward also, we are confident that we should be able to do better this year compared to the last year. Thank you.
Thank you. The next question is from the line of Chirag Sehgal from First Water Fund. Please proceed.
Yeah. Hi. Thanks for the opportunity. Just a question on this Einstein acquisition that you have made. So you have mentioned consideration of up to 45 crores. So I didn't understand why up to 45 crores. Is it yet to be determined, the acquisition value? And secondly, if I look at the numbers, the last 3 years turnover that's mentioned, it's 2 crores, 2.2 crores, and 3 crores. So can you explain how did you arrive at this 45 crores cost of acquisition for such a small company? What is the rationale?
No, see, they have property. See, basic idea of acquiring this property, was to get a new office in Mumbai, and this is located in Interface 11, which is the prime area, and the value of property itself is more than 42 crore rupees. So idea, and this is, this company is holding the property, and that is the main reason for acquiring the company. This will give us, office space of around 18,000 square feet carpet area, and it is in the prime location. So this will give us an advantage of consolidating all the offices in Mumbai and to have better visibility and better delivery. Plus, at one place, if we have all the people sitting, that will enhance the efficiency and productivity of our employees also. So, in fact, the valuations are very, 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 very reasonable. For 18,000 square feet area, carpet area in Mumbai, for 42 crore, you can work out what could be the cost per square feet. So this will give us an advantage. The entire idea was to acquire this company because this was done by by K. Raheja. The development was done by K. Raheja, and the way the offices were distributed was through companies. So we have acquired this company. With this company, the property comes. I hope this will clarify your query.
Yeah, that helps. Thanks for that. So second question is on the growth in the broking and trading segment. So if I got it right, you mentioned that the crop is 52%, correct?
Correct.
Yeah.
Okay. So if I look
in terms of profitability.
In terms of profitability.
Yeah, in terms of profitability, not in terms of revenue. In terms of
we are moving towards more of clientele business with the help of all the products that are available, including PMS, EIF, retail algo trading, and more focus is on retail. So currently the ratio is around 60% volume being done by clientele business and 40% through prop desk. Going forward, we'll try to enhance our share of retail trade with the different offerings that we have. We have complete product portfolio, so we can offer everything to our customers, and we are well equipped. We have a very good team. So we are taking new initiative to see that we can have our footprint in the wealth market also. So these are the vision of the management, and I believe this will further strengthen our sustainability of business. If Sachin, you would like to add something here?
I think Abhinav was saying something. Yes, Abhinav.
Yes. So I think as explained by Kamlesh sir and as asked in the query, when we say 50 to 50% approximately is contributed to the prop, it is in terms of the profitability. In terms of revenue, of course, those numbers can have a different point of view, given that prop business might have more turnover-based transactions rather than purely service-based transactions.
How much is it as a percentage of revenues?
So in terms of percentage of revenue, it would be slightly higher. It would be approximately 60%. If I have to give a ballpark figure, it would be around 58 to 60% of that.
Okay. So, when I look at, let's say, 8-9 years ago, split of prop and client business, and when I look at the prop share in the total revenue and PAT, it used to be 60% of the revenues and say 70-75% of the PAT. So definitely it has come down, but it has not come down. The dependency is still very high on the prop book as a percentage of a total top line and PAT. Now you have given.
I'll sorry to cut you off on this. I'm not sure where you're getting your data from. But if I could speak about from 8.5 years ago, at that point of time, prop business used to contribute around 90% of our revenue and around 70-75% of our profitability. It has never been, so even pre-COVID, we used to contribute around, business used to be 85% dependent on proprietary in terms of revenue and around 70-75% in terms of profitability. And as explained in our earlier calls as well, we have been constantly trying to reduce our dependence on proprietary, not only because of we trying to reduce our dependence, but all the other businesses are growing much faster than what proprietary businesses grow.
Thank you.
And one more point here. Please also try to note that the size of the business has grown up multiple times since last 7-8 years, especially after COVID. And we are even after that we are able to increase our customer base services here in revenue and PAT drastically high. So as Abhinav said, 8 years ago it should be around 85 to 90%, and which is around 60%. Even after the size has gone up like multiple times. So that's because constant effort and new revenue streams. So we keep on. So you can easily figure out the number of branches 5 years back, number of branches now. No PMS, no wealth team, no India Credit NCD, no wealth management, so no merchant banking, nothing. Correct. So all these efforts have been done in last 3 to 4 years, and they all are showing good results.
We have some unique advantage of algo trading. So we have algo for the retail investors. In addition to that, we have our own technology platform called Techon. So on technology front, we have managed very well. Even acquisition of Silverleaf, which is HFT firm, has added our strength in terms of technology and delivery. So we have certain unique advantages, and we are basically strategy-based, clientele base. So this attracts a lot many clients who would like to do algo trading or automated trading and use our platform. So this all thing has given a lot of advantage, and that has made us unique business model compared to the other players in the market. Thank you.
Thank you very much. Due to time constraints, that was the last question. I would now like to hand the call over to the management for the closing comments. Over to you, sir.
Yeah, thank you. Thank you all the stakeholders to have participated in this meeting. Indeed, the questions that were asked during the session were very interesting, and it has given us a lot of opportunity to explain not only what we are doing right now, but also, it has given opportunity to explain our future plan and the way we are likely to move ahead in the market and maintain our market share as well as competitiveness in the market. The numbers are already good. So with the things getting settled, we hope for better future for the market. Any regulations may have short-term impact, but overall, in long term, those who can adapt to the system efficiently will always get benefited. So thank you again. Thank you all for attending this meeting and having your trust and support. Thank you.
Thank you. On behalf of Valorem Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.
Thank you, everyone. Thank you, everyone.